We are the audit engagement team for Nature's Beverage. My name is Zach Weber.
I'm Marina Sassani.
My name is Tan Tran.
So I'm going to start off this presentation by giving you a high-level background of what's been going on. So we have entered into an agreement with Coffee Co. And Coffee Co. is a global distributor of both coffee and tea. Recently they have decided to focus their business efforts on their coffee, so we have taken over their tea in the contract. The contract gives us distribution rights for herbal tea, their most popular tea brand in all of South America. And this is beneficial for us because, as you know, we have been trying to increase our global footprint. With the distribution rights, we also get all of the customer contracts in South America as well. The problem is we don't get any of their employees or their distribution capabilities. The total cost for the sublicense was $3 million, and we incurred $50,000 for various fees, such as accounting fees, legal fees, and consultation fees. So with all this, there is an accounting issue that arises. Does the acquisition of the sublicense meet the definition of a business? And then dependent on that answer, what is the accounting treatment moving forward? So to give you more detail on these accounting issues, I'm going to hand it over to my colleagues.
Thank you, Zach. The first issue we need to address is, does the acquisition of the sublicense by Nature's Beverage to distribute herbal tea meet the definition of a business? Nature's Beverage must determine whether acquiring the sublicense to distribute herbal tea meets the definition of a business based on the Accounting Standards Codification for Business Combinations. To determine whether an activity or asset may be deemed a business is dependent upon whether a set of criteria is met. Guidance provided in ASC 805-10-25-1 states that if the assets acquired do not meet the definition of a business, the reporting entity shall account for this as an asset acquisition. Therefore, Nature's Beverage may consider its sublicense as a business that is capable of providing returns to interested parties only if the fundamental requirements that constitute a business are satisfied. The guidance presents an overview of the requirements comprising the definition of a business. This includes defining the single or similar asset threshold criteria and identifying the appropriate inputs, processes, and outputs. Implementation guidance in 805-10-55A through 5C is assessed to determine if the assets acquired fall into a single or similar asset threshold. Per ASC 805-10-55-5A, if substantially all the fair value of the gross assets acquired is concentrated in a single identifiable asset or group of similar identifiable assets, the set is not considered a business. Here, the license can be classified as a single identifiable asset. All the fair value of the license acquired is $3 million is concentrated in the asset. And though a value could be assigned to customer contracts, the assumption made in this case is that substantially all the fair value will still remain with the license. So for simplicity, we will only assign this to the license. Finally, though the license and customer contracts are considered identifiable intangible assets, they are not considered similar assets. Since the asset threshold is not met, we look at additional implementation guidance in ASC 805-10-55-4 that covers inputs, processes, and outputs. At a minimum, we need both an input and substantial process. The output here are the revenues generated. Our input here are the employees that execute the process, and the process we have is the distribution capabilities. We are missing the last two since Coffee Co. retained those. Asset acquisition appears to be the most appropriate after review of appropriate guidance when determining if this acquisition meets the definition of a business. Under ASC 805, first we need to determine if the criteria meet the similar asset threshold. If this is not met, additional assessment is conducted, and that assessment is in terms of the input, process, and output. Since we do not have the input and process in this case, we've decided that this acquisition does not meet the definition of a business, but instead falls under the purview of an asset acquisition. And now I'm going to pass this over to Tan.
So, after determining the transaction does not constitute as a business, we decide to recognize the assets based on the assets acquisition. However, before that, we have to assure that the sublicense meet the recognition criteria from FASB concept statement number 6 to be qualified as an asset. The first criterion is the probable future benefit. In this case, by acquiring the sublicense together with the customer contract, Nature Beverage will be able to utilize the established customer relationship to generate revenue in the upcoming period. The second criterion is control all the access. After getting the sublicense, the company will prevent its competitors from distributing the same branded product or boutique in South America. And the third one is the timing. The entity will be able to recognize the assets at the closing of the agreement on March 1st of 2018. After the recognition of the assets, we will determine how to record for the transactions. Consists of $50,000 for consulting and legal fees. And then on top of that, $3 million for the sublicense. Based on ASC 805-50-30-1, which regulate the acquisition of assets rather than business. Which stated, assets are recognized based on the cost and the transaction costs. In this case, the transaction cost will be the legal and consulting fee. Therefore, we will capitalize $3,050,000 for the sublicense, and assuming coffee company will give us a credit line, we will make the following journal entry on March 1st of 2018. Debit assets, sublicense for $3,050,000, then credit cash for $50,000 because we will have to pay it upfront for the lawyers and the accountant service. Next, we will credit account payable for $3 million. Assuming the assets will last 7 years and the company has a calendar year end, we will have to prorate the amortization expense for the first year according to the guidance of Acct. So on December 31st of 2018, we will debit amortization expense for $363,000.95 and then credit the same amount to accumulated amortization. By making this journal entry, we will recognize the expense of using the sublicense for the first year. Next, I will pass on to Jack to conclude this presentation.
Thank you, Ten. So to summarize what my colleagues have said, we conclude that this does not meet the definition of a business. And then because of that, moving forward with the accounting process, we're going to capitalize the cost of the sublicense and also capitalize those fees that we have incurred as well. So thank you very much for your time, and we hope you enjoyed the presentation.